It's always a pleasure to have you guys back on my channel. So I want to take this time to thank you guys for your support. This channel is growing, and if you haven't subscribed to my channel, please subscribe, share, and like this video. This triggers the algorithm, YouTube algorithm, so that it can recommend this video to more traders. So let's get down to business. So today I'm going to be sharing with you guys a strategy. Okay, I recently talked about divergency, but it was the RIS divergency, but we still have the same concept. So we're going to be using this divergency theory to scalp, boom, and crash. So what we have here, for those who do not know what is a divergency, so we have the indicator here. This is my indicator. And whenever the movement that the indicator is making, for example, you can see here, the indicator is moving downwards. But if you go up here, we can see that the price is making an upward movement. So what we have here is a divergency. So this one is a bearish divergency, a regular divergency. So so we're going to be looking for these divergences and using MACD. It's one of the most powerful and accurate indicators that can be used for reversals. So in boom, the market will be going up. So if you are going to be scalping and catching these small candles, these small red candles, these ones, this is what we're going to be trading. We'll wait for an opportunity where the market moves downwards altogether, like what happened here. Once this divergency occurred here, you can see the market moved downwards. So I'm going to be sharing with you how we can identify the divergency, how we can enter the trade, where we can place the stop loss, and where we can also exit the trade. Yeah, I've noticed this with most strategies. One, when I started to trading, I wasn't a fan of scalping because of a simple reason. The risk to reward ratio was very low. You are aiming to only get 5 candles, 5 1-minute candles. Once the spike catches you, your account is blown. So I didn't want to take that risk. So I focused much on spike trading. But when I discovered this strategy, I noticed how powerful scalping can be. So with this one, you're not going to only take 5 candles, or you're not only going to take 20 candles. You're going to take more than that. You can be in a trade for an hour making money with the smallest account, with your $5, with your $4, $10, $20, $50. You can make use of this strategy. Okay, so in this strategy, let me explain how you enter the trade. Okay, so once we have identified that the price here on this point, it has made high highs. We can see it's making high highs. The price is moving up. We come here, we check here. This one is making low lows. We can see the movement is in opposite direction. So that's a divergence. Once we have identified a divergency, the next thing that we're going to do is this. One, we wait for, so on the MACD, we have this histogram, which is in blue. Mine, I've used the color blue. Then we have this red line, which is the signal line. So this one, and these are the two that we'll be making use of. So we wait for the histogram, this blue histogram, to cross below the red line, this one. Then we enter a trade here. So this is our entry. We enter here. Then where are we going to place our stop loss? Since we've entered here on this candle, we place our stop loss above 5 candles, above, not this is 5 minutes, so you only place it above the highest, the previous, above the height of the previous spike. For example, on this point, you're going to place your stop loss here. It's very important. This is why I didn't like, again, scalping, because most of the videos that I was watching on YouTube, they didn't tell me where I was going to place the stop loss and also the exit. Okay, so we're gonna place our stop loss here, 5. You put only one candle, so you can count one candle here above the height. Placed our stop loss and we ended here. When are we now going to exit the market? So when we enter here, our exit for a sell trade in boom is going to be when the signal line, which is the red line, crosses again below the 80 level. We have a 20 level, sorry. We have the 20 level here. So when it reaches this part, that's when we close. So if you look at it, we entered here. Okay. We entered here. This is where we have our entry. And we're going to exit here now. Our exit is gonna be here. Here. So if you can check here on this part, we have a lot of candles here from here. We have a lot of candles here. We have a lot, about 15 minute 5 minutes candles. That's a lot, more than an hour, while it's just enjoying the profits. So the MACD is very good when it's when you're trying to identify divergence. So let's look for more examples, then we can move on to boom 1000, crash 1000, and then we can also move on to 500 and 300. I don't want to make this video too long. Okay, again, on this part, we also have a divergence. If we can all see that at this point, this is the movement. We can also see that on this part, the price on this part is moving upwards. But if we check here on the MACD, this is the movement that is taking place. The price in our MACD histogram, the height of the histogram, the MACD histogram, the one in blue, is moving in opposite direction. So we have a divergence here. So again, we do the same. We wait for the histogram to cross below the red line. At this point, we enter and we place our stop loss 5 candles above the height of the previous spike. Then we move down with the market and we close our trade at this point. This is when we are going to close our trade at this point, when the signal line, the red line, crosses the 20 level on our indicators window. Then we look again for another example. Let's look for another example. So your job, your task is just to identify divergences. Once you've identified divergence, then you wait for the histogram to cross. Okay, here again we have another example. So these examples will be there. So in trading, what I've identified is this: patience. Patience is very key. If you're going to make money in forex trading, patience is very key. You need to be patient. So again, here we can see the price is moving upwards, making high highs. But if you check on the indicator now, the height of the histogram, the blue histogram, this one, we can all see that it's moving downwards. They are moving in opposite direction. So we wait here at this point. Here, that's when we enter. Then we move down with the trade. We hold it up to this point. Then we exit. That's how simple this strategy is. So let's look. There are a lot of examples where this will be unfolding. There are a lot of examples where we'll be having divergences. Again, here we can all see that the price is moving upwards. But if you check The price at this point is moving upwards, but if you check here, the height of the histogram is moving downwards. So we're going to exit and enjoy these trades up to this point. So we have a lot of examples. So let's move on to crash. Let's move on to crash 1000. So I will try to look for at least 2 examples. Then we can. So in most cases, when the market is reversing, after a period of spikes, there will be divergence. We can see here now, it's a form of divergence again. If you look here, okay, let me use this one. If you look here, this is what is taking place. But let's look at the movement that, so now it's now the opposite. In crash, we'll be looking for these movements. We can see the indicator now, the MACD is showing an upward movement. But if you see, it's slightly slanting downwards, moving downwards, or it's almost horizontal, the movement that the price is making. So you're going to enter here now. Once you've identified that, you're going to enter here and move with the trade. Move with the trade up to this point. So you enter here and you move upwards and you exit your market here. Then after that, let's look for another example again. Let's look for another example where we have divergence. Okay. On this part again, we have divergence. Let's look. The price is moving downwards, but here we have high highs. It's moving upwards. So these, okay, so here we have again another example of a divergence. We enter here at this point. We place our stop loss here below the previous height, the lowest part of this previous spike, this part. So we only place it slightly below, then we move and ride this trade up to this point. Okay, let's go. Okay, up to this point where it reaches the 80. Now, here we're talking about 20 when we're talking about boom, but in crash, we'll be talking about the level 80. So basically, that's it. We have a lot of examples. Let's look at an example in. When you now move downwards, you're now going to boom 500, 300. Let's look at an example in crash 300. So we do the same. We look for divergences. So let's look for a good example. Okay, here the price here is slightly. If you look at this movement, the market came down, went up, came down, failed to break this previous low. So if you check here, it's almost horizontal. But let's look at our indicator here. We can see here it touches level 10, but look here at this point again, the price made this movement. Okay, let's look at the indicator. The indicator is showing this movement, and what is the price showing? This movement again. So again, there's divergence. We do the same. We enter our trade at this point. We place our stop loss here at boom 500. We will identify a divergence. Okay, let's look for it. So we have an example here. If you check here, the price is making this movement. It's going up, but the height of the histogram is going down. So we're going to enter at this point where we're going to enter at this point here. Now when the histogram is now moving below the red line, then we ride the trend. When it reaches level 20, so it depends with your preference, but I would suggest that in boom 500, 300, only take 5 to 6 5-minute candles, which is something like 30 minutes, because a lot of spikes will be occurring in this market, and there are high chances that the market can easily reverse. But it's a lot. Okay. I think these are all the examples. So in my next video, I'm gonna be sharing with you. Okay. Oh, I was forgetting the indicators. So let's look at the indicators that we're gonna be using. So basically, we're gonna be using two indicators: the relative strength index and the MACD. Also, let me just quickly delete this. So when you go to the F icon, this icon, then you're gonna click it. You click it, it will take you to this. Then you're gonna click on this one. Then when you're done clicking on this one, you first of all need to insert the relative strength index. So the relative strength index is only there so that you can have the levels. So this is my relative strength index, and these are the parameters. Period 1, apply to close. You can change even the color of the background, but you can leave it like that, because when it's on period 1, it will not show. It will not show on your indicator, but it's fine. You can leave it like this, or you can change it and use the color of your background. Then on the levels, this is the most important part. We have here, you need to use level 90, level 10, 20, and level 80. Those are the levels that we're going to be making use. So on level 20, you must write close sell trade. Level 80, close buy trade. So basically that's it. When you're done inputting all these parameters, then you click done. So you now have, if you come back here, we now have this. This is what we have. Then the next step is to go again on the F. Click again. Now we're going to click on this one. We want to insert our MACD on the using the levels that are there on the RSI. So we come on indicator window 1, the small f, this one. We click it. Then we're gonna look for our MACD. But the MACD, we're gonna make use of these parameters. So the fast EMA, we're gonna use 18, slow EMA 36, MACD SMA 14, apply to close price. Okay, so the styles for the main line, we have blue with 1 pixel. Then signal line, we have the red with 2 pixels. So when you're done, you click done. If you check here, we now have this. So for the zoom level, a lot of people will be asking about the zoom level. So I would suggest that you zoom in, zoom out completely like what I've done. Then 1 like this. Yeah, this one is perfect. This one, this level. So the second from last, this is the zoom level that you must use. Or you can zoom out completely, then you reduce 1, 2, 3, this one. This one is fine, this one. Okay, so basically that's it. So thank you so much for your time. So I've noticed that most of my audience, most of the people who will be watching my videos are not subscribers. Please subscribe, share, and like this video. Thank you so much for your time. Let's go there and make money.